Everything we go over is for educational purposes only. Nothing we're going over is going to be any type of investment advice. As always, future returns are not indicative of past results. So first thing I want to go over, I just want to talk about VRX a little bit. This morning, VRX it went on a rampage. We were talking about it before our meeting where we right under 25.50, and all of a sudden huge volume came in on some news to do with their board. So we could see from 25.50 all the way up to 31. Now it could never really get any type of demand over that 30 level, as we could see here. Now, first time it came up, we did get all the way to 30.50, but really on a hollow move. Not really too many prints that came out there, so we can see it came right back down. But the big number to watch was that 29.40. Because we could see on the first pullback came right to that print level. We got a little bit more demand that came in and pushed it right back up. Now, once again, we hit 31. Sellers came right back in. And we came right back down. Now, the one thing that we would have had to anticipate in the real trade here was right under that 29.40 level. We could see the print line right here in that green. Once it came up, we got a real large volume spike. Now, something that you guys want to remember, and we can kind of see it right over here. But you can see our plus signs, which means our volume breakouts. Now, one thing that we want to look at when we're looking for our next entry, and we're trying to anticipate that next entry, is going to be where the volume spikes actually came in. So we can see, once again, I always kind of bring this up, but history tends to repeat itself. So right here, right about 29.75, we can see where our big selling spike came in for pretty much that third time. So we had a bunch of selling come in. But right here under that 29.75 level, we had a big volume spike come in that pre-market level. So what that tells us is when the stock comes back to this price that we want to start anticipating something going to happen the next time. So we can see if we put a line out there, just for the recording so we can kind of see it a little bit better visually. All right. So that's 29.70, but we can see right here around 29.75, we can see that if we anticipated the next time it came to here, we had more volume come in and the stock actually bounced up off of it again. Now, the third time, we got to remember, so it came up here, we pulled back. So the second time on the first time, then the second time that it came back down here. Okay, what usually happens when a stock comes back down to the sellers? Buyers, excuse me. So buyers held it up right here. We could see right at that 29.75 level, stock came back up. Now, what usually happens, okay, when buyers run out? Is the stock going to stay above that level, or is it going to end up falling back down? As we all pretty much know, the buyers tend to run out, and it's going to fall back down. So that's really where we wanted to be watching this stock. Now, if you weren't able to take it there, because that was pretty much almost right at 9:30, and I know a lot of you kind of wait a little bit, a few minutes, 5 minutes, 10 minutes, depending on what your trading level is. We wait for that stock to come back down, and then after that 5-minute period, their next entry would have been right under that 29.40. We could see buyers were running out. The buyers didn't even come in until that 29.40 the first time. And then the second time, they came in a little bit higher at that 75, but there was just nobody left up there to keep. No one was really that interested once the market opened to keep it above that level. So once that we broke back down below that level, we can see that we had a nice little pull down to the downside, but then it pulled right back for our entry, right under that 29.40 level, which made for a great trade all the way down. Bruce says, what about the print line below? Would you wait till below that? Now, Bruce, there's two ways you could go about it. Now, we knew the volume spike was there at 29.75. So really what that told us, we were going to have at least 25 cents to go from that trade. So me personally, I take that trade because 25 cents, now it is a fast moving stock, don't get me wrong, but because we saw the volume spike, and in this specific example, the buyers running out at that 29.75 level, I personally, that's a safe high probability trade because the buyers didn't come in until there. So we know it was going to react at that 29.40, but based off the sellers coming in under that point, that tells us that we're probably going to have a high percentage move, a lot more than that 25 cents. So technically at 29.40 from 75, we have a 35-cent move there. So you want to anticipate if you do take it under that 29.75, you want to be ready here at 29.40 in case we do see buyers come back in. But based off the example that we saw in that big volume that was coming in, not only from the first time, but then, from right here, Okay, 35 cents once again is nothing to be upset with on a trade. So you do want to be ready, but we anticipating that volume spike. We have to watch what happened in the history and what actually came in over here. So it was still a very high percentage trade, and worst comes to worst, you get a 35-cent move. That was probably the easiest point of that trade during the day. Now, 29.40 was even more, even higher percentage once it broke back down past that. We can see we got some big volume to come in right afterwards. But those are where when we talk about anticipating trades, that's how we do it. We look at where the big volume came in, and like I said, history usually repeats itself. So if volume came in one time, chances are that the next time we can assume that volume's going to come back in there again. All right, I just want to kind of go over an example. And this, even though big moves, this really wasn't that fast a moving trade today. Now, we had some bars that were pretty big, but you can see the consolidation here. It was very controlled and not, really not that hard of a trade to take, even though VRX usually trades pretty quickly. So this was probably, for how big a move it made, one of the easier trades that you were going to get today. This was pre-market. Would you hold into the bell? It depends on this situation, yes, because of just the setup that we had going there. But it depends, if I don't see something that makes it very clear and a high percentage trade. So this trade right here, you're talking about over 75%. There was over a 75% chance that this thing was going to break down below that 29.75. Once it did, because we could see the sellers came in right before the pre-market open. And then even once the market did open, that's when we had our second trade, our second entry there at that 29.40. So in this situation, yes, but I'll tell you one thing. I don't typically hold into the open unless something's kind of jumping out, like in this specific situation. This was just a very nice setup coming in. Even though right now, as of this little pullback right here from the 28 to come back up, I wouldn't be looking to short it based off the setup. I'd be anticipating a little bit of a volume spike above that 50 right now. But obviously, we're going to need the prints there to be able to take anything. But that's just, I wanted to give you guys my mindset on a trade from this morning, because this one kind of just jumped out. And not for nothing, but when you have this much volume, 32 million shares already being traded, we knew this thing was going to have a nice range. So once again, it's just by anticipating the best possible entry that we can get, it helps to be able to it helps us to be able to take a high percentage trade and be ready for it and not miss it when it happens. Remember, we got to make a game plan, and then we have to work that game plan. That's one of the most important parts of trading. So once it comes, we can't second guess ourselves. We have to be ready for that number. Once that number comes, just execute. No thinking involved. All about that setup. So let's say we were in, I don't know, let's say we were in right here under that 29.40. Okay, so we're in this trade. Okay, volume starts to die down a little bit, but because we're not going to just get out because the stock's pulling back a little bit. Look what would have happened here. All of a sudden, you're already in this trade, and look, bam. This stock goes from about 28.75-ish, like in that area, all the way back down to 27.75. So you're talking about $1 move in a second, give or take. And if you look, if you would have got in under 28.75 or even under 29, this never came back to test your entry. So there was really no reason to even get out of it. But look what would have happened. This move. Now, if you tried to trade this move, do you think you're going to get filled? You got to kind of get that out of your head that if a stock just starts running, that we can trade it. I mean, that's great to say in hindsight. And there's a lot of great things that we could say in hindsight. I could call every single stock out here what it did after I look at it. And yeah, I could go back in time in sales and I could show you the prints that did it. But if you don't know before the prints come out, anticipate what's going to happen and what prints are going to be coming out, it's not going to happen. And that all comes up with going on the setups and going over that volume. I told you guys, I wrote a blog about anticipating, and it was one of the first ones I wrote, and it was just anticipating volume spikes. So right here, we see a big volume spike, right? It's abnormal compared to everything else that happened. Okay, so this volume spike was at, it's not going to tell me because it wasn't over 100%. But let's just look at the right here, so where it started. So it was pretty much at 28.25. Well, guess what? Look what happened every time it came to 28.25. Big move. 28.25, volume spike, big move. 28.25, volume spike, big move. 28.25, volume spike, big move. So guess what we should be doing at 28.25? That's something I look at like, I mean, that's one of the number one things I look at is where the price level is and the volume spikes that happened within those prices. Exactly. You should be already ready with the price that you're going to be really kind of looking to get in. Now, keep in mind, we want to wait for our prints and we want to go there, but we can anticipate the prints happening. And if we're not anticipating them, then they happen, then it runs away, and we wonder why the hell can't we get our trades in? But that's something I religiously look at. The second I look at a stock price level, I look at what happened across from it. So like right now, we're coming to about 28. Let's look. I guess you could say the 28. See, I wouldn't anticipate this because look, I would anticipate 28.75, but I'm not going to anticipate these volume spikes below that level because I can see the sellers came in each time and brought it back down before it got back to 28.75. Okay, so what am I going to be looking at right this second? First, I'm going to be looking at 28.50 because, oh, well, I'm not, excuse me, I'm going to be looking at 28.50 to see what happens. But at 28.60, we can see across the board, we keep getting these volume spikes. See these plus signs that add up right across that level? So if I know that's happening, do you think I really want to be in right now? Now, even though the level's 28.75, what has it been able to even get to 28.75, or have sellers came in and volume spikes came in and pushed it down before we could even get to that level? This is how you guys got to think. But if the stock breaks this right now, now we're not going to trade it here because we can see that 28.75, we have our volume spike from before right here. Okay, we have a volume spike right here. So we know 28.75 is a level. So guess what I'm anticipating if it breaks out of this little consolidation right here? Guess what I'm getting ready to trade? It's already loaded. I would already have it loaded up and have my other level 2 loaded up so it's with which amount that I'm willing to trade. I mean willing to lose. So I'm already gonna have both my level 2s, my loss amount that I'm already at my game plan. Because if sellers run out, we're going to get what? We're going to get a trigger, right? And if sellers don't run out and we come back down, eventually the buyers are going to run out, right? So you got to remember, if everyone's in a fight, okay, so the buyers and the sellers are in a fight, and we can see this fight happening. We keep seeing it's been happening all day because right here we go across this line, we see all the plus signs. 1, 2, 3. We have 3 plus signs lined up, which means volume. It means volume is coming in. If the bears lose the fight, what's going to happen to the stock? It's going to go up. If the bulls lose the fight, where's the stock going to go? It's going to go down, right? So shouldn't we already be anticipating that we're going to have a nice move on this thing soon? Or should we just wait and react? Reacting is good to a certain extent. But if you don't anticipate, a lot of the times you're not fast enough to react. I'm not fast enough to react. We don't have these programs on our computers that we could just set up triggers and stuff like it. It doesn't happen like that. And even if we use like a stop limit order or something like that, what's going to happen? We're just going to get skipped. We have to be ready. Well, because I don't. No, if the Bears lose the fight, the stock goes up. Bulls lose the fight, stock goes down. Just buyers and sellers. Sellers lose, stock goes up. Buyers lose, stock goes down. Anticipate a trade at 28 with no volume. No. Where are you getting 28 from? I'm anticipating volume coming in. I'm not trading it until it happens, but I'm anticipating. If I said that wrong, Bruce, I mean that should be a pretty simple question for everybody. I hope you guys know if I said that wrong. But just because right now there's no trade here, I've already analyzed everything. I'm already ready for what I'm going to do. I already know what I'm going to do. Do you know how important it is to have a plan in a stock? Now, a lot of you got to remember you're in a not a beginning stage of your trading careers, but you're in the beginning. I mean, a lot of you haven't been trading for years and years, or if you have, you haven't been doing it this way. Okay, so if you try to make a decision based off looking at it right at the and you try to look at it right before as it's happening and make your decision based off that, you're going to miss almost everything. You can't analyze it that quickly yet. It's not going to happen that way. But if you were to already know what you want to do, I'm looking under 50, Steve, or above 75, depending on who's going to lose out. But I'm not going to. I can see the volume spikes here, so I know if the best side of what I would want to see right now is for this stock to break this like 60 area, and then I know I'm going to get a trigger for above 75 for a pretty decent long, probably about 50 cents. Where the next resistance point is. That's the best trade that I would see right here. So I know that right across the entire day, it's been happening there. So once it breaks and the sellers run out, my best case scenario trade is above that 75 level because I know I'm going to get a volume trigger. It's happened. It's already happened all day. It's one of the best things about a chart. Look at our volume. When we go across right at 75, we have one volume spike, we have another volume spike, okay, and we have these volumes that we can see the sellers are coming in lower to push it. Now, if the sellers run out here and we can trigger above these volume spikes, I know once we get up here, I can anticipate volume coming in to push this thing up again. But I already have my game plan. I already know exactly what I'm going to do when it happens. I have it done. So, do you think that if I would have just pulled up the stock and then I see it coming as, say Woodwatch 75, and I just pull it up right away, do you think I'm going to be able to see that in that instant second that I pull it up to go to look at it, or am I going to miss my trade? Now, this is a great, I'm going to miss it. So, Laura, once again, I know I went on a tangent kind of from your question, but I think this is what you guys are kind of missing a little bit is anticipating exactly what we expect to happen within this stock. So when I see a fast moving stock, I'm doing this same analysis. I'm doing the same exact thing. It's just I got to do it quicker. It's just doing it quicker. I have to have, and it's even more important with a stock that's moving fast to have my game plan already set. I already know where my entries are going to be. Now, did this come over years of experience? Yes. Don't get me wrong. Am I able to see? Some of you might not would have seen exactly what I just thought. Well, JB, I just told you what I'm looking for. But you got to understand, when I see it happen, there's no thought process. I'm not going to say, well, did I really get my follow through or did I really get. No, I'm just going to click the button. And if you're not that confident, just trade 10 shares. Just get in it. But I already know exactly what I'm looking for before I get into a stock. Now, a slow moving stock is it as important? Yes, it's across the board. It's just as important for every single stock. But a fast moving stock, you have to have this done previously. If you don't already know where you want to be getting in or to be looking to where you get in. Now, keep in mind, there's two differences between a plan and a plan that doesn't come to fruition. Now, I have this plan here, but if we come up and we don't see that volume come in and I don't see that volume spike, am I going to just take the trade to take the trade? No. How am I seeing the buyers and sellers run out? Okay. And look what's about to happen. This is going to happen in fruition as we speak. But let's look, and I use these things a lot. That really big, it's a big part of the way that I look at trading. But let's look at our plus signs. Does everyone know what these plus signs mean? So you should be able to kind of see them. I know they're a little bit small, but I don't like making them big because then they get in the way of the bars. Okay, they're called volume breakouts, and basically all that's telling me it's set up for I think 100% more than what the 20-minute moving average is. So I mean that's just what it's set up for. But basically what it tells me is that big volume came in. So it's a spike of volume that's bigger than what's been happening. It's 100% larger than what's the average of the past 20 minutes has been happening. So when I look across the board here, Andy, let's look. See how right here, see how we have these bars coming right across? One, two, three. We have three of those volume spikes happening at that same price level. Okay, we see those? One, two, three. Everyone, we're good so far? All right, so I know it's sellers because look what happened each time the stock came down. The stock came down. So how does the stock go down? Stock doesn't go up from buying. It goes up. It goes down from. Excuse me. Stock doesn't go down from buying. It goes down from selling. Right? Exactly. So I know it's selling because they keep coming down. Now, what it tells me, Andy, is that because these volume breakouts are happening, okay, it looks like we just had another one right here. But because those volume breakouts are happening, this person, I'm trying to think of a nice way to put it. Jay actually used this term the other day, and it's really not appropriate to be saying on a recording, so I don't want to say it. But they're kind of I can't think of a good way to put it, but they're selling a lot. Yeah, they're kind of shooting their I don't want to like I said, it's not really an appropriate term to be using, but they're trying hard, Andy. I can tell that they're really trying to get that back down because look, they needed to use so much volume at these points to put it back down. You see that? It's not a coincidence that these volume breakouts keep happening right here at that specific level. What that's telling us is someone's really trying to keep it down. So if they keep shooting their whatever and the stock keeps coming down, what's going to happen? I mean, how many more times can they can they sell their amount? Exactly. It can only happen so many times before they have nothing left, right? Exactly. And if the stock keeps coming down just on little selling, I'm not going to anticipate it that way. Like I'm talking about right now. That's not going to happen because you could sell all day if you have a huge position and you're selling little amounts of shares of something. But if they keep selling those large spikes, and I keep seeing those plus signs coming up, guess what's going to happen? There's only so many plus signs someone could put out there. And then eventually, what's going to happen? Like if we look right here, see, we were just talking about our 75 level. See how we come in right there and see how now we have these three. We have this guy right here, this guy right here, and this guy right here, all at our 75 level. So guess what I'm going to do once it breaks 75? Someone's trying. They keep coming in, but guess what? They're going to run out. So I'm already ready above that 75 level. Now, we couldn't take the trade here because remember, this is at like 60. So we know once it breaks past here, we have 75, but we're not going to take that trade because it's 15 cents and then, once again, but guess what's going to happen once it breaks 75? Guess what I can anticipate happening? We can anticipate, no, well, not only we can anticipate it to reach 29, but we can anticipate large volume coming in. Well, you got to understand, Andy, the colors are kind of ambiguous. Now, the colors are right quite often, but You gotta kind of look. Now, when I see those colors, I do follow the plus signs more than I follow the bars. But if I see plus signs and I see the stock keep coming down after those plus signs, what do you have to assume it is? Up, and here we come to 75. Oh man, it's magical. Well, not yet, Bruce, but we can anticipate that the volume's going to come in because right now we're getting our prints above 75. A lot of them are inside the bid at the moment, which is just a good trader, but we can anticipate this stock popping. And look how slow it is right now. Do you think you'd have problem getting into the stock at the moment? Now, once again, I'm not an advocate of you guys buying on inside the bid prints at all. And I mean, this is exactly why you're going to get a little bit of a pullback, but we can anticipate this volume coming in, and we're going to see it happen.